Hi, and welcome to the Real Estate Nerds Podcast. I'm your host, Scott Royal Smith. We are home for everything asset protection, looking at real estate investing, asset protection, estate planning, tax savings. You name it, we do it all in-house as your unique one-stop shop. I'm streaming this right now live to our private Facebook group, which is Tax, Legal, and Asset Protection Secrets for Real Estate Investors. That's a mouthful, but all you have to do is be part of it, and it will pop up for you there. Yeah. And we'll also be having this on iTunes and Stitcher for you guys here. But if you want that secret sneak peek access, you got to get inside of the Facebook group. That's where everything is going to be at. That's where the conversation is actually happening about these podcasts that we're doing. If you want to chime in about saying, here's some different insights that you might have that you want to share with the community, that's a great place to do it. So I want to say thank you to Kirk for being willing to come on the show today. He's from Option Alpha. Overall, seems to be doing really well with everything that's going in here with the Corona scare that you guys know is going on right now. But as you know, at Royal Legal, like we're talking about one thing, which is how do we come out of Corona stronger than we went into it? And that can mean a lot of different things. It could be stronger financially, it could be stronger as a person, stronger with your family, stronger relationships. The important part, guys, is that we take this fear that we're all feeling right now and we channel it into action steps to overcome obstacles that previously had stopped us from being able to do it. This is a unique opportunity that's in front of us right now to be taking all of that energy, channeling into something and breaking it down. That might be true for you guys on looking at your estate plans. It might be true for your asset protection. It might be true for your budgeting. It might be true for you in a lot of different ways. You know the things that you've been waiting on doing and that you've always thought that you should be doing and you haven't taken action on it. Right now is the time to do it. You're sitting at home. You got nothing better to do. Take that fear, drive it into action. You're going to come out the better side of this Corona thing stronger than you went into it, because now you've got that to-do list kind of checked off, and then boom, once that's off your plate, markets are going back up again. You're going to tunnel right back into your work. You're going to be better, stronger, faster, clear-headed at that point. And that's what I want for you guys. That's what I'm creating for myself, and I'm creating for all my people here at Royal Legal. And if you're a client of Royal Legal, you know that that's what we're creating for you too. So thank you, Kirk, for joining us here on the show. For everybody that doesn't know you, what do you think is going to be important for them to know about you before we, talk about like your worst deal, like what your background is and what was going on in your life before you got into this worst deal?
No worries. So I'm the head trader and founder over at Option Alpha. We've been around for about 10 years. We're an Inc. 500 company. Grew it as a startup and as a bootstrap company. My background is in finance. Like I literally live and breathe finance. Like on my wall and behind me, it's like all finance related stuff. And so I started out as a mergers and acquisitions investment banker at Deutsche Bank in New York. Quickly realized I did not like to be an investment banker, and the hours were terrible and the people were great, but it was not the lifestyle I wanted. I quickly transitioned and jumped over the Chinese wall and went to DC and worked as a REIT analyst. So my real start in real estate, I guess, was REITs. My family's been in real estate forever, so I always had that kind of in the background. But as a REIT analyst, I kind of really dug into real estate investment trusts. I was covering triple net and housing and a little bit of industrial and office. So it was a really fun experience. During that time period, I started trading at home and realized that options and markets were kind of my true passion, built an education and now software company around it. But at the same time, my wife and I have always been investing in real estate. That's kind of, I would consider it like our side hustle and like long-term wealth planning. We got 3 kids and my wife stays at home, manages the kids and me and the real estate as well as I do. So that's the long and short.
That's awesome, Kirk. Well, I think that's like a, really great background and obviously you've been really successful with what you do now. And I think it's like one of the great things it's about like this podcast that makes it kind of really unique, is that we get to talk to, really great people that are ultra successful and kind of say, okay, well, where are those skeletons? Where are the things that kind of like went wrong, right? And what are those lessons that we learned from that? One of the things that we talk about time and time again on here is that saying like, hey, every deal you get into, you think it's a great deal to start. That's why you actually did the deal. If you thought it was bad, you wouldn't have done it, Right. And that there's a technical piece of knowledge that comes into feeling confident going into a deal, and that most of us, especially the ones that are, the ultra successful types, they have really great knowledge and analysis, but even that doesn't guarantee the deal. And in fact, maybe nothing really guarantees deals, right?
No,
but there also seems to be something in here that's on the other side of this, which is like, what's the mindset? What's going on? But it's not the analysis. It's not the analytics. It's this other piece to kind of delve into that for us to be cognizant of, to create awareness about, so we can tell as listeners and learning from you about your experience through that.
Yeah, I think,
you know what I mean?
yeah. So, I mean, like mindset wise, even before we talking about like a specific deal, like I've always been of the mindset that you have to be ultra conservative. I mean, like I can't tell you like how many books and research papers and like old newspapers I would like read and still continue to read. Actually, on my wall are 3 newspapers through the 2000 or the 1929 crash, and it was the newspaper before, during, and after, the Barron's newspapers. And I always try to think to myself, like, every single deal, every investment is bad. Like, you have to start off on the assumption that like something bad could definitely happen. It's just trying to figure out like what the bad things are and then what's the expected probability of those things happening, right? And I think if you go into deals like that, kind of eyes wide open, you get a better sense of how much risk there is associated in a deal. And obviously you learn as you continue to do more deals. But like I was always taught, and I learned this from one of the CEOs that ran a REIT, and he said the same thing. He's like, look, every investment that we make is bad to some degree. He's like, there's something wrong with it. There's a reason why somebody's selling it. Like it's on the market for a reason. Like it was the chosen thing that they decided they did not need at that moment, right? And so you have to figure out like what that is and what it's worth and what the expected outcome is. And I think if you try to do it as analytically as that and not be so emotional about things, you'll be fine. Like, people always ask me, like, most of what I do now is options trading, and I love options trading, but I still do real estate all the time. And they're like, well, why do you do real estate? I'm like, well, because I don't know what's going to happen in options trading next month or next year or like whatever. Like, it's still like pretty like random in the sense of the distribution of returns. And real estate could be very much the same. But if I don't have like a distributed source of income across my business, options trading, real estate, other investing that I do through like private equity and venture, like, then that would be stupid of me to focus everything that I have on one property, one income, one thing. So I try to take the analytical approach, super diversified, ultra conservative, and I think it's served well.
Can you tell us like a little bit about that? Because I think a lot of people, when they hear like ultra conservative, that really means like, hey, I'm just never going to do deals, because I'm going to be too conservative. That goes along with it. And from my experience, and we deal with guys that like are from your background, that it actually means something a little bit different than what it would mean like in I'm just killing every deal that comes up.
Yeah. I mean, like when I think about like ultra conservative, it's, to me, the term that I always use, and like my wife hates this because I feel like we argue about this all the time, but like, what's the expected outcome of like a deal? Like, what's the expected payout? There's a 80% chance they pay on time and there's a 20% chance they don't pay on time, or whatever it is. Like, what are the numbers actually shake out to be? So, for me, when we talk about like a conservative deal, I'm looking for multiple ways to have a piece of property that I can manipulate and potentially turn a profit on. It's also one of the reasons, like, not to dovetail like too much into options, but like one of the reasons why I like options versus equities, because you can manipulate it a little bit to some degree and you can, reform the payoff diagram. And so when it comes to real estate, I'm not just looking at cash flow. I'm not just looking at appreciation. I'm not just looking at the condition of the property. I'm looking at all of those things combined to say, okay, what's the real expected outcome of this property? I'll give you an example. Like, we looked at property a while back in a town near us, and I'm outside Pittsburgh in Pennsylvania. And this guy was selling all of his property and had a major medical issue, big investor. And he was like, literally, just pick 5 properties, you bundle them all together for $150,000, pick any 5 you want. I'll come down. Like, you come down, you look at them, and you pick any 5 you want for $150,000. So I went down and I spent the day with him, and I drove around and I saw these properties, and we're talking like 38, 40, 50% like cash on cash return. But you had to drive down and pick up the checks every month. Right. And they're in really bad neighborhoods, and like neighborhoods that I probably wouldn't even feel safe like getting out of the car in. And like, so I look at that and I'm like, that's an amazing return. And you could do 2 years of grinding work and probably, like double your money potentially. But is it really worth it? Like, is that really the expected outcome? Is that all that there is? Like, there's probably a lot of litigation. There's probably a lot of people who are just going to trash something and have to replace it. Like, it's just not good on the surface level just to look at one factor like that. Does that make sense?
Yeah, absolutely. And I was wondering, like, as it comes into that, like, what are the resources, or what are the books that you would recommend, especially for real estate investors, that you would say like, hey, these are the types of books or resources that you would look at that would really encapsulate the kind of frameworks that you use to look at these types of issues or investment thinking?
Yeah. I mean, I think there's, there's books, obviously a lot of the books from like the Bigger Pockets guys, Brandon Turner's a friend of mine, and I invest with him. So I think the books that they've put together are really good. Books from a guy named Todd Trester, who's the financial mentor. Really good. There's a book, which is truly my favorite book. It's called The Misbehavior of Markets. And it just talks about how not everything works the way that it should work. And we're actually seeing this right now. Like, this is why this is so important, because markets don't behave the way that we think they're going to behave. And the risk that massive catastrophic things happen on the tail end is actually much higher than we all expect. And so I think some of those types of resources would definitely be helpful. Those are more, besides like the real estate stuff, they're more geared towards like financial modeling and expectancy, but it's all basically the same thing in my book.
Is that right? And Kirk, do you have a book too that you have that like has like your thoughts about how do you some of these issues with financial modeling?
Not yet. I have an idea for a book, but I'm not writing it yet. So we'll see what happens.
Oh, cool. Okay, right on, man. Yeah, well, one of the things that we're actually doing right now with like Royal Legal that we'll end up launching here is that we're actually launching different types of like coaching. So what we'll end up doing is producing and taking on all of the infrastructure of how do you actually produce like video series, and then working with people who are influencers or somebody like yourself, right? And saying, hey, great, what's an outline of the kinds of content that you would want to have produced? All right, let's get on there. Let's capture that content and put it through all of our editing process, and then like we host it. So you'd have a page that says, here's all of our pieces. And so you can start to generate that kind of traffic. And then when you have a book, that's the basis for like what the ghostwriters need to actually produce the kind of books and that kind of stuff.
Yeah.
So.
I never, people have always asked me, and I've always wanted to write one, but until recently, I've never had a solid idea. But I think I have a solid idea. I just got to flesh it out for some time.
Yeah. So. Yeah. We use the same process that Tucker Max uses. That's out local here in Austin too. So if you're looking for, that's the best book writing process.
Tucker's in a mastermind group that I'm in. So yeah.
Oh, okay, right. Yeah, I was just hanging out with him actually here in Aspen. And so then I was starting to like look at his stuff, and I was like, yeah, this is a process that I looked at for a year and a half, and I wish I just would have read your stuff because you already handed it out for like what it was into there. So that's awesome, man. So it sounds like you're well on your way to doing that. And just so we can like highlight that for everybody, so to understand like the financial modeling and the best, you mentioned Todd Trester, and you also mentioned the misbehavior of markets. Those would be the two big things to look at to say, hey, this is kind of how Kirk would think about, financial modeling that might apply to financial systems, but also would apply to real estate.
Yep. Yeah, I think they're two of the best ones just to get your head wrapped around like the actual risk and expectancy of things.
Cool. So let's take what happens with a really smart guy like you who's super well educated in there and see where you screw up.
Did a bad deal. Yeah. I love it. No, I mean, like,
let's talk about the bad deal.
Oh man. This is like the hell house for me. And the funny thing is like this deal was a break-even deal. But it was I would have never bought this house over again. Like I wanted to sell it so quick after we bought it, and held on to it too long. And just lucky enough, like we didn't lose, nor did we make money on it. It was a break even. But it was a duplex house. It was a town over from us. We bought it for a good price. All the numbers worked. We walked into the house. It was a house that was a big old like Victorian that was converted into a duplex. And so the downstairs was the one unit, and then outside and up like a fire escape stairs, there was a second unit upstairs. And like when you look in the house, you're like, oh yeah, it makes sense. And we were kind of, naive. It was one of our first investments. Actually, it was our fourth investment. So I would still was one of our first. And we were naive in the sense of like, there was somebody in there already, and they were renting and have been renting there for a long time. And I didn't pay attention, honestly, to the layout or to all of the deferred CapEx and the deferred maintenance. And that I wish I had never seriously like set foot in the property, because I was very much lured by the wonderful return, very close to us, long-term tenants, no issues, blah, blah, blah. And we just ran into like issue after issue after issue.
Are you talking like roofs and like plumbing and all those kind of things too, like in the deferred maintenance?
Yeah. So like, I mean, like roof, plumbing, the garage caved in because it was just like so old. 1920s, 1930s, the garage like caved in, and, and even then, like we couldn't get a new building permit because they weren't allowing like new garage, like, so we just had to like tear it down and just like remove it. So that was terrible. The layout thing I think was the worst. To be honest with you, because it always took like 2 to 3 months to rent out. I mean, just like always, because you walk downstairs, and the downstairs unit, you walked into basically a bedroom it was the only room that had a closet. So from the front door, you walked into effectively a bedroom. I know it's so stupid. Like even when I think about it now, I'm like, this is the most like asinine thing that I've ever done. It's like buying a stupid place. And then you walk to the left, and that was supposed to be the dining room slash the, slash the like the living room. And then you walk to the kitchen and then the bathroom. And it was just like, who walks in the front door of a house into a bedroom? And like when people were in there, they were like where do you put the bedroom and where do you put the, and I'm like, well, I don't know where you put the bedroom because I wouldn't be here either, And that's why I was like, we should really sell this. So as bad as that was, and it had orange, so upstairs had orange countertops, it's just really bad. And so then like fast forward and we go to put the house on the market. And so I finally convinced my wife, look, we've got to sell this thing. Like the deferred CapEx is killing us. We put in hot water heaters and boilers and, fixed siding and like all these things are just killing us. And so we decide to sell the property. And lo and behold, the town was now going through not only just a tax reassessment, but was also redoing the sewer lines that it had never redone since the 1950s. And so as a result, they were requiring every homeowner who was not on a main sewer line to connect at their own expense to the main sewer line. So we had a corner property that was set back. And of course, our property was not on the main sewer line. So we had to dig up the front yard and the side yard to run a pipe to reconnect all the way to the sewer line in the middle of the road. And it was like a $5,000, plumbing job. And for that property, it wasn't a big property. It wasn't a huge moneymaker, but it like blew a year and a half worth of like that on top of everything else, just like blew profit, And to me, like looking back on it now, like that's one thing that I really think about now, no matter what area I'm in, it's like, how likely am I to go through a reassessment? Like what major projects are coming down the line that could affect this property, right? And I didn't think about any of that stuff when I started that. I didn't think about the layout. I totally didn't think about CapEx and deferred spending. Definitely didn't think about, a tax reassessment and like sewer pipes, like, so now we call municipalities and boroughs and towns and we just ask them before we buy property, do you guys have anything planned that we should know about? Like, is there any like upcoming things on, the schedule 2, 3, 4 years out? Like, is there anything we should know about? We're buying a property in town. We're totally ignorant. Like tell us what we should know. And we learn a lot of stuff. And I think to some degree it's helped us keep out of deals where they say, yeah, like we're going through reassessment as well, but it probably won't be this year. It'll be next year. Okay, great. That's really good information. Right. So anyways.
That's really awesome, man. As I was wondering about that, like has that something that you've like developed like a system and a process? Like a lot of clients that I have will be like, hey Scott, I got like a 12-page checklist that I go through of like all the things that I consider. I mean, is that something you put together for yourself as well?
Yeah, I think, like what we try to do is we try to look at obviously the house. We do a lot of trust and verify now. So when we're looking at the particular property, I can't tell you how many times I've been sent information about what the utilities are and I verify them with actual statements and it's nowhere near what people said the numbers were. So we do a lot of trust but verify on the house. We call around to the municipality, township, county, the borough, wherever the house is to try to figure out what's going on there and see if there's anything missing there. And then beyond that, it should be more of like the high level macro, like why are you investing in this town? Is the job growth okay? Is population growth declining or increasing? I think that's more macro. So on the house level, it's a lot of the trust but verify on the numbers, and then calling around to the municipality and the local governments to see what might actually, impact it. Like for example, like the garage that like caved in, I should have called the municipality and said like, say this garage caves in because it's 7 years, and it's not really looking good. Say the garage caves in. They're like, can I rebuild a garage? Like, and if they would have said, actually, no, like we're not allowing that right now. Okay, that would maybe made a difference in my offer, because that was an expense I wasn't expecting. So,
yeah, right on, man. So I think that there's that part of it that's like a lesson learned of like here's like system. It sounds like that coming out of this experience of like hindsight, you're kind of like it sounds like you're pretty hard on the guy who got into that deal because you're like, hey, how could you have not seen all these things? But you've come out with like saying like, okay, I got some new systems, some new processes, like new things that I'm thinking about that helps me a little bit be more sophisticated here. And those are things that probably like other people would want to seek you out for, seek people out there like you that say, hey, like, who's really has like these, great resources and that from to partner with, right? I mean, that might be a way to judge who to partner with people that have those types of processes developed and think through things
Right.
on that kind of level. But I was wondering if we go back to like the very beginning of the deal. You seem to describe it as saying like, well, I was really excited about the return, and so I was blind to everything else.
Yeah. It was because, so we had just bought a month before this. We had just bought another duplex 3 streets over, and still own this property today. Love this property. Great property, same tenant pool, like style, same rents, same general numbers. So when this property came up, which arguably was on a better street in a slightly better part of town, even though it was a couple of streets over, it was on a corner lot, it was up on a hill. We didn't have to worry about any like flooding or potential like, drainage issues or whatever. And I was like, immediately I was like, yeah, like why not? Like this is a slam dunk deal, like the numbers are just as good. And like, why shouldn't we go after this, right now? Like we're looking to, buy some property. And I think it was that mentality of like, we already had one that was good, that automatically this next one would be really good. And I think that was foolish, to be honest with you. I think that each individual deal, no matter how close they are in proximity or how good they look, like 2 apples aren't the same. So.
And is it like one of those things too, that it's like just being cognizant of like maybe biases like in there? It's like, I got like a success bias.
Oh my God. Yeah. I mean, there's 8, I think there's 8 like real strong investor biases. But like the success bias and the false sense of positives are, like really aggressive biases that people fall into. So this idea that like you have a success and you had a success that like just happened to be on a really bad investment creates a false sense of like positive emotion and endorphins in your brain. I think that definitely that was a factor. Like I think now I truly believe, and I try as much as possible to literally slow down. Like everyone is going so freaking fast in every market environment, and everything's always rush, 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 rush. It's actually not, we don't need to go that fast with deals, right? There's actually not a sense of urgency for any deal anymore. And I think that the idea of slowing down and like really thinking about how this fits into the overall portfolio, or like what we want to do now. Like now one of our big things is like, we don't want to manage a lot of properties. So like, as we're transitioning from some of these other properties that we started with when we didn't have 3 kids and we could do this all ourselves, now we've got 3 kids and like, they take a lot of our time, and admittedly we want to spend time with them. So now a big thing is like, how much management does this really need from us? And like, we have to slow down and start thinking about these things. So I think the biases definitely play into it. I think we just ultimately move too fast for our own good.
Do you find that like, so there's a piece in this too, right, where I think everybody kind of gets, like, I don't want to say like stuck or something like that, but it definitely is a point of consideration. I think some guys that are like investors, and I think that like especially with GoBundance, that group, real estate investment group that I'm a part of. I think Brandon Turner is a part of as well too. They do these things called one sheets, and one of the line items on the one sheet when you're doing like the snapshot of like your financial future and what your financial reality at the moment is, it look like what's your effective dollar per hour, you know? And it's something that like I always have like kind of like keep in the back of my mind of saying like, well, is there even like a further differentiation when we talk about like effective dollar per hour? Because there's actually probably like this thing of called like, is that even an hour I want to do that? Like kind of deal, right? Because at some point in here, it sounds like you're actually making a decision that's saying like, well, I got the 3 kids. This isn't a financial decision of whether I'm trading time for money like I would before to be able to get a certain ROI. There's actually not enough money that you could pay me out of that thing to say like I would rather trade it.
I think actually, and this is really interesting because we talked about this actually on another podcast I did, but to me, there's actually like, I think there's hidden forces in how I think about real estate now that I don't think that I definitely know I never thought about before. And it's not just like the family factor or like the lifestyle factor, which arguably a lot of people like consider. And so do we. Like, I think we all should. Like, do we want to be picking up checks with like a gun, like holstered to our side because that's the type of town that we're in? Like, no.
Absolutely. Give me a flamethrower.
Right. Yeah. Like, I think that's a consideration. But Now what I think about, and my wife would definitely say, like, I bounce back and forth, where some days I'm like, yes, like real estate is really awesome. And some days I'm like, you know what? Like, I don't care about real estate at all. Like this one house, like made $3,000 this year. Like we could make that in 10 minutes, like someplace else doing someplace else, something else. But I think what I think about now are like the hidden factors. Like what is the value of consistency? What is the value of something that continuously pays, generally a stable cash return, right? And it might not be a dollar value, but if that value is able to, let's say, save your job, save your income, save your credit score, what's the value of that? Like, what are the multiplying factors beyond just the income that it makes and the appreciation that it makes? And even more so than that, now I think about with extra properties, like, crap, my CPA has to do another like Schedule E, like, he's got to throw it on the Schedule E. It's like, what's the value of this property going to be as far as like his time? What's the value of this property going to be as far as like my time and my attorney's time to draft up documents every time and draft up a lease and like create another bank account and do all this? Like, what are those extra little like value things that really suck potential deals, I would say potential away? And so I think those hidden forces, nobody thinks about on the surface level. They don't think about them intrinsically. It just happens as an extrinsic factor that just like manifests after time. And so, yeah, I think it's the kids and all these other things. Does that help?
Well, I was wondering about that. Like, have you met anybody that's of like higher net worth that thinks in the same way that you do about like some of those, about like all the hidden costs? And if you have, like, what have you like observed that they do?
Yeah, I don't know if I've necessarily met anyone who maybe I not that I know that they think like that, but I've had a conversation about that. Like I read a book a while back. It's called like 10,000 Homes. Actually, might be on this. But it's from Mitch Albom. Yeah, it's called 1,000 Houses. I don't know if you've heard it. Mitch.
Yeah, Mitch.
Steven.
Yeah, he's actually out in San Antonio, just south of it.
Okay, yeah.
That was his ranch like a little while ago.
Yeah. So I read that book and I was like, man, I don't want 1,000 homes, right? And that's what I got out of that book. That's probably the biggest lesson I got out of it, is like, I don't want homes. There's people who want 1,000, that can be really big investors. And I don't think you have to be a big investor and you have to fall into a certain category or niche or whatever. But I really think about now those extrinsic factors. And I think mostly, to be totally honest with you, I think about the liability now. Like I see such liability, like everywhere I go. Like I'm like, like seeing so much liability. And I just don't think that most people are protecting themselves in everything that they do. We've gone through two amazingly awesome, and that's not the case. They're terrible. 2 evictions, right? And I learn something new every time we have a really tough financial legal situation with a tenant. And what I continuously learn is that I'm not factoring in the legality costs of having to deal with property as much as I should be. And it's like, that's another factor that I think about. And I would exponentially grow that with 1,000 houses. Like, it just seems insane to me. So I don't know. Does that make sense?
Yeah, 100%. That makes sense. I mean, that's actually kind of the world that my company like focuses on, right? Because we're always focused about like, what's the liability? How do we actually think through something like in a holistic mindset, because like a lot of the people that we run into, they read a book, catch a guru, and then they're like, oh, sweet, I want to go buy a house. And I was like, well, did you know that as you grow this, there's like 9 other things that you actually need to be thinking about at the same time? And that if you grow one area and you don't grow the rest of them, it'll actually just come back to bite you super hard.
Totally.
Like, that's where I mean, it's like, I think it's like a lot of times it's like people don't know what they don't know. And it's the things that get you, are the things that you don't even know you don't know, until they come in. And like the law, who understands the law besides like a few people,
Right.
And
whoever wrote it doesn't even understand it. So
yeah, right. And then like a judge can actually just change it, on the spot of like what you thought it could be anyway, right? So it's like this totally unpredictable, wieldy thing, and that well, that's why I really like what I do. Like being a litigator from a litigation background, like I understand that game, and there's like a really particular way to play that game where you don't actually have to care about the law or the facts. You just have to make the business decisions work out right.
Right.
You understand like how lawyers actually work and how lawsuits actually go as a business. Then you can actually approach it just like you would any other business decision, and it's really neat.
Right.
I think I just wanted to underscore that for people about saying like, this is something I'll talk about. Like, you guys just don't even know the level of risk that you're coming into. And you've really experienced that. It sounds like. I'm saying like, man,
Well,
I know that. Yeah.
Yeah. Like, I think that I get like woken up to the fact that like we have more risk than we think we have. Right. And this is funny because like in my business and options trading, this is what I've told people for like years. Like, you don't know how much risk is in this market. And like these last 2 weeks, I've been totally vindicated because people are emailing me and they're like, holy crap, Kirk, like you're totally right. Like these markets are not normal. Like, there is no normal. Like, and now like I've realized over the last, couple of years with real estate, holy crap, there's so much risk that we don't even know about, like it's not priced in. And that's the thing. It's not even priced in. Right. So like people think, oh, well, yeah, there's risk, but like if you're making $1,000 a month, like what could you do? And I'm like, well, there's a lot of risk that you don't know that you have and that you're taking. And to me, that's a big consideration now. So like even small things now, like we don't self-manage any of our properties anymore. Like we remove like one level of like, potential risk by not self-managing our properties. And that like little thing, like I hear people say all the time, and I support what you learn from self-management. But just understand, just as much as you learn from self-management, you better have your head screwed on straight, because if you don't do something and you're the self-manager and the owner of the property, correct me if I'm wrong, but like, holy crap, like you just opened up like Pandora's box, basically, if you do something wrong,
Especially if you're doing stuff in your personal name and you're owning assets in your personal name, you're doing it wrong. Rich people, we have like a rule that we repeat by us. Rich people don't own things and they don't pay taxes, and we should all try to be like rich people.
Right.
know? And
Yeah.
then, and they also don't do things in their personal name.
Yeah.
Like, never.
Yeah. And it's just like, I don't know. So anyways, I feel like the level of complexity of risk that we just don't understand in any financial investment requires us to be ultra conservative at all times.
That's awesome, man. Well, I was wondering, Kirk, I've really enjoyed like our time here today, and I think we really got like some really good, nuggets out here. I like to wrap up every episode with like a lesson learned, and then give you an opportunity to be able to reach out to people for any way that they want to connect with you and learn more about you and what you do and what you teach about. So like there was one piece that I learned that like it was a good reminder for me into that from your story today, Kirk, was like how easy it is to get excited about things that have worked really well in the past, and that it's probably like a fool's errand to expect that because it worked well in the past that it's necessarily going to work well in the future.
Right.
And we always need to be reevaluating, what are the new risks that we could see and where could things fall off. Cliff, I think that's actually hitting a lot of business owners right now too, where they're like, oh, I didn't expect half my leads to just dry up.
Right.
And holy smokes, what do I do now, with that? Because maybe I expected like a 10% or a 20% decrease, but not 50,
Right.
that come in within a week, like
Yeah,
that
a
kind of
lot
thing.
can change. Yeah. I'm still with you there. I mean, like, I think that, it's really fascinating to see how quickly our world can change, and you just have to be, I know, flexible enough to just move with it, I think, ultimately. So
That's it, man. And if you wanted to leave like the listeners with like a lesson learned, to hear, it's just something to highlight of what the things that you kind of talked about today,
yeah.
what would that be?
I think that when I look at investing, and I'm still learning. So by the way, I'm not done by any stretch, right? So I consider myself very much like a, kindergarten student to investing. But what I've learned so far is that investing is so interconnected that we think that every investment acts like a little silo. But if we've learned anything from even the past 2 weeks, just with how interconnected the global economy is and the global markets, we can't help but think that like everything that we do has a rippling effect across our entire financial picture. So, like I think my biggest lesson over the last 2 weeks or even the last like couple of years is every investment that you make is so interconnected to everything else. You better have all your ducks in a row. And just because you don't think that, your investment here is going to impact your retirement there, or your income or your paycheck there, like you've got it totally wrong.
That's awesome, man. And for everybody that wants to reach out to you, Kirk, and connect with you or learn more about you, what's the best way for them to do that?
Sorry, yeah. You can reach out to me. Just it's pretty much everywhere at Kirk Du Plessis on Instagram, Facebook. You can also reach out to me at our company, optionalpha.com, or we're everywhere at Option Alpha for the company. But either way, whatever works for you, be happy to help.
That's awesome. Everybody reach out to Option Alpha. and connect up, learn about what Kirk is doing there. Hound him a little bit to make sure he goes ahead and writes that book. You find these like guys that are ultra successful and super smart guys are really lazy when it comes to actually
really lazy. Once I get through quarantine, maybe I'll do it. Yeah,
right now it's quarantine, baby.
No, I have to keep 6 feet minimum distance. I can't mess with anybody.
Yeah, man. Yeah, just that sweet keyboard, action, and the quarantine is what we need.
Stuck here. Well, yeah, no, I appreciate it. So thanks for having me on very much.
Yeah, awesome, man. Well, thank you everybody for joining us with this episode of the Real Estate Nerds podcast. Of course, I'm your host, Scott Royal Smith, owner of Royal Legal Solutions, your one-stop shop for everything asset protection, tax, and legal for real estate investors all over the country. This has been our installment for today, and we're live streaming everything right now onto our Facebook group, which is the Tax, Legal, and Asset Protection Secrets for Real Estate Investors Facebook group. Definitely want to check that out. And of course, you're listening to this on the podcast on iTunes and Stitcher. So thanks everybody for tuning in, and we'll catch you next time.